$259 billion. That is what 5 companies are spending on AI this year. If you own any tech ETF, those numbers are coming out of your portfolio. Tonight, Microsoft and Meta report earnings. Tomorrow, Apple and Amazon. I ran all 5 through the Kronos AI model to see what happens next. Here is what the data says. Here is where these 5 stocks stand right now. Microsoft at 389, up 3% on the week. Meta at 593, up 1.8. Apple at 337, up 0.7. Amazon at 231, down 0.7. Nvidia at 196, down 4.8. Combined, these 5 companies are spending $259 billion on artificial intelligence capital expenditures this year. That is more than the entire GDP of Finland. And investors are starting to ask a question that nobody wanted to ask last year. When does all this spending actually turn into revenue? Tonight's Microsoft and Meta earnings are the first test. Tomorrow, Apple and Amazon face the same scrutiny. The Kronos model has predictions for all 5. Let me walk through each one. Microsoft reports earnings tonight, and this is the most important report of the week for one reason: artificial intelligence revenue. Microsoft is the only company that can directly attribute revenue to AI products. Its Azure AI business is growing faster than any part of the company. Microsoft is spending $84 billion on capital expenditures this year, most of it on AI infrastructure. The stock trades at $389.10. The market expects Microsoft to deliver a strong quarter, but the bar is high. After a year where Microsoft added AI features to everything from Word to Excel to Teams, investors want to see actual dollar signs, not user numbers. Revenue. This is the Kronos 30-day forecast for Microsoft. The blue line is historical price. The green dashed line is the prediction. The shaded band around the prediction is the confidence range. Kronos predicts Microsoft will rise to $403.36 over the next 30 days, a gain of 3.7%. The upper end of the range is $430.96. The lower end is $371.59. The model is essentially saying that if Microsoft delivers a solid earnings report tonight, the stock has room to run. The bullish case relies on Azure AI revenue growth. If Microsoft can show that its AI products are generating real money, not just user adoption, the stock breaks above 400. The bear scenario is that even a good quarter is not enough to justify the $84 billion in spending. The range tells us the uncertainty is all about tonight's numbers. Meta reports tonight too, and this is a different kind of earnings story. Meta is not selling AI infrastructure. It is using AI internally to sell more ads. The company spent $40 billion on CapEx this year, mostly on AI data centers and computing power. But Meta has something the other 4 do not. It already proved AI drives revenue. Its AI-powered ad targeting system increased average revenue per user by 11% last year. The stock trades at $593.87. Meta has a market cap of $1,250 billion, $12.50. It is the cheapest of the 5 by forward PE at 22 times earnings. But Meta is also the most volatile. The stock can move 15% in a single day after earnings. If they deliver tonight, Meta could be the best performer in this group. Here is the Kronos 30-day forecast for Meta, and this is the most bullish prediction in this entire analysis. Kronos predicts Meta will rise to $627.30 over the next 30 days, a gain of 5.6%. The upper end of the range is $668.63. The lower end is $549.53. The model is saying that Meta has the strongest setup of any stock reporting this week. Why? Because Meta has already demonstrated that AI spending translates to higher ad revenue. It is not a promise. It is a proven model, and at 22 times earnings, it is cheaper than Microsoft at 31 times. If Meta delivers a strong quarter tonight, the stock has the most room to run because the valuation has not yet priced in the AI ad revenue growth. The risk is the lower end of the range at $549, which would mean the market is not convinced the ad business can sustain its growth rate. But the base case is up. Apple reports earnings tomorrow, and it has the most unusual position of any stock in this video. Apple never joined the AI spending arms race, while Microsoft, Amazon, Alphabet, and Meta are spending a combined $254 billion on CapEx this year. Apple kept its spending relatively disciplined. That strategy made Apple the safe haven of this market rotation. It is now the most valuable company in the world at $4.93 trillion. The stock trades at $336.91. But here's the problem. Apple is facing iPhone demand headwinds in China, its second largest market. Chinese consumers are choosing domestic brands like Huawei, and Apple's AI strategy is still unclear. The company has not articulated how it will monetize AI the way Microsoft has with Azure or Meta has with ads. Apple is winning by not playing the AI game, but that only works if the market stays afraid of AI spenders. This is the Kronos 30-day forecast for Apple, and this prediction surprised me. Despite Apple being the safe haven of this sell-off, Kronos predicts the stock will drop to $279.17 over 30 days, a decline of 17.1%. The range is wide, $255 on the low end up to $351 on the high end. The model is saying that Apple's recent gains as a defensive trade are not sustainable. Once the AI sell-off stabilizes and investors rotate back into growth stocks after earnings, Apple could lose its safe haven premium. The upper end of the range at $351 means there is a scenario where Apple surprises everyone with an AI announcement tomorrow. But the base case is lower. The model suggests that buying Apple as a safe haven at $337 could mean buying near the top of that trade. Apple needs to show it has an AI story tomorrow, or the stock may drift lower. Amazon reports earnings tomorrow, and this is the stock with the most to prove. Amazon is spending $78 billion on CapEx this year, second only to Microsoft. Most of it goes to AWS data centers and custom AI chips. The stock trades at $231.39. Amazon has a market cap of $2,150 billion, $2,150. The bull case for Amazon is simple. AWS is the largest cloud provider in the world, and AI workloads are migrating to the cloud. Every company building an AI application needs computing power, and AWS is where most of them go. The bear case is that Amazon's retail margins are under pressure from competition, and its AI spending has not yet produced the revenue growth that investors expect. The options market is pricing in a 5.4% move after earnings. That is substantial for a stock with a $2 trillion market cap. Here is the Kronos 30-day forecast for Amazon. The model predicts a rise to $247.09 over the next 30 days, a gain of 6.8%. The upper end of the range is $257.98. The lower end is $213.46. Kronos is bullish on Amazon because of the structural demand for cloud computing. AI training and inference workloads are growing exponentially, and AWS captures the largest share of that market. The model is essentially betting that even if Amazon's retail business is flat, the cloud business alone justifies a higher stock price. The risk is the lower end of the range at $213, which would happen if Amazon reports weak AWS growth or guides lower on CapEx efficiency. But the base case is up. Among the 5 stocks, Amazon has the highest predicted upside at 6.8%. Nvidia already reported earnings last quarter, but it is impossible to talk about AI stocks without including Nvidia. The stock trades at $196.51. Nvidia is down 5% this week and has fallen from its position as the world's most valuable company. The market is repricing Nvidia from a pure AI winner to something more complicated, a lender. Nvidia's $250 billion guarantee for OpenAI's data center change how investors think about the company. Credit default swaps hit a record high. But here is the reality. Nvidia still controls 90% of the AI chip market. Its revenue grew 75% last year. The sell-off is not about the business. It is about the financial engineering. The market does not want its favorite chip company to also be a bank. This is the Kronos 30-day forecast for Nvidia. The model predicts a slight decline to $191.02 over the next 30 days, a drop of 2.8%. The upper end of the range is $206.39. The lower end is $162.07. The prediction is mild compared to what we saw with Apple. The model is saying Nvidia is not in free fall, but the rally is over for now. The stock may trade sideways as the market digests the implications of Nvidia becoming a lender. The key number to watch is the lower end of the range. If Nvidia breaks below $162, the sell-off becomes something more serious. But with 90% market share and 75% revenue growth, the floor is solid. The model suggests patience, not panic. So what is the bottom line? I ran 5 stocks through Kronos. 3 are bullish, 2 are bearish. The stocks reporting tonight, Microsoft and Meta, both show bullish signals. The model says Microsoft could reach $403, up 3.7%. Meta could reach $627, up 5.6%. If you're holding those two through earnings, the Kronos data says the risk-reward is in your favor. The stocks reporting tomorrow are a mixed bag. Amazon is bullish, reaching $247, up 6.8%. Apple is bearish at $279, down 17.1%. Apple is the most dangerous position in this basket because the market has rotated into it as a safe haven, and safe havens can reverse course quickly when the fear subsides. Nvidia is nearly flat at $191, down 2.8%. The model says the AI trade is not dead, but it is becoming a stock picker's market. The days of buying any tech stock and watching it go up are over. Here are the full Kronos predictions. Timestamps for every section in this video are in the description. Subscribe for daily AI-powered market analysis. What stock should I run through Kronos next? Let me know in the comments. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making investment decisions.